Hello, everybody, and welcome to this very special episode where my good friend Adam Skank is on the podcast with us, who is a real estate Jedi based on Los Angeles, California. And today we're going to be talking about if you're considering purchasing a house within the next year or so, or even right now, we're going to talk about what it's going to take to get approved, what it's going to take for you to go find the right agent, and what are the check marks that you need to check off as such. So that I'm very, very excited to introduce Adam here. Adam, what's up, man? And how you doing?
Good, Ali. How you been?
Oh, bro, I am so glad that we get to do this together because me and Adam are in men's group together. And I challenge anybody to find a Middle Eastern and South Asian man as close to a white dude. Like, we have done some amazing work together. And it seems weird that we're in this context talking about business because we never do. But Adam's got a great heart and he comes from a really authentic place. I know this man, and that's one of the reasons.
If I may, Ali, that work made me better at real estate because real estate is a very emotional experience, and a lot of people don't cover that aspect of it. Right. So it's whether you're buying your first home or you're selling a family home, it's a very emotional experience. I often like to say you're not really my client until we get to talk about fear. That's when I know you're my client because it's real.
I love it. I love it, man. So speaking of fear, man, a lot of people, don't know, especially folks that, that are tuning into this podcast, maybe struggling with some credit issues and whatnot. And everybody has preconceived notions on getting approved for a home is probably the hardest thing to do. And, again, we've spoken about this. And why don't you dispel that myth for us as to what it would take for somebody to, for instance, get approved for $1 million home in an urban area like Los Angeles?
Yeah. So nowadays, credit score is important, but it's just one leg on the table, right? You got to have income. They're going to look at your debt. So there's a lot of things you can do far in advance of actually getting into real estate. It's one of the reasons that both Ali and myself recommend talking to experts early on. Like if you're planning on starting to look next year, you should already be talking to a mortgage lender, a real estate agent. If you need to improve your credit, a credit repair agency, because those things can take a little time, and so can finding real estate. I've worked with some clients for a year and a half before they found a home, especially in an area like LA where it can be hyper competitive. So I think the number one piece of advice I could give overall is don't reach out earlier rather than later, because not only can we get you there quicker, but we can help you avoid hurdles that you just don't even need to deal with. We've done this many times. I've been involved in hundreds of real estate transactions. So there's hurdles that you don't need to handle. A lot of us professionals can take those out of your way in a very, very short amount of time.
Beautiful, man. I love that because, the way I've worked with prospective home buyers too, when they come to me for credit, they're like, hey, we want to get approved for a loan a year down the road. I'm like, let's go find your realtor. If you don't have one, call your realtor, call your loan officer. Let's all work as a team. And the good thing about that also too is like one of the things that, people don't get is that you could get a home loan for as low as a 580 credit score. It may not be the best terms, but if you're a first-time home buyer, 580 gets you a foot in the door, 640 gets you a decent rate. You don't need to have perfect credit. And with FHA financing, I've got a podcast here with Rod Viana who talks about the loan requirements of FHA as a loan officer. But, you don't need to get really good rates. You don't need to have more than a 640 odd credit score. That gets your foot in the door to get a decent rate. Unless you're looking at a very premium house compared to the county you live in. For instance, in LA, it's $1 million is the average home price. But if you're looking for a $2 million house, then your score needs to be higher. But, the government backs these loans. And that's one of the reasons why, lending is easy if you have 3% down, a 640 credit score and what have you. So,
and this is a good place for me to jump in and say, This is why it's important to talk to everybody, including a realtor early, because it's not a hard thing to get an FHA loan. It's a hard thing to get an FHA offer accepted. So you want to have somebody that you've already vetted and you've talked to them. Hey, I'm going to be an FHA loan. How many of those transactions have you done? Do you know the hurdles? Because there are hurdles. FHA loans, they're going to expect more to be right with the house. If I'm a conventional buyer, I can buy a house that's got an older roof. FHA is going to be a little more strict on that. So you want a realtor that knows that and is in touch with that. And knows how to do that in the best way for you, and even sometimes learn how to avoid those things. As an example, a buddy of mine I used to work with that Paul, I've seen him on an FHA loan go out because they said, well, there's a lot of chip paint around the windowsills and we're not going to approve it. So he and a buddy of his went out, sanded it down or repainted it. It took a day and it got the loan to go through. And there are realtors who will go to that extent to make sure you get your home.
Gotcha. Let's just talk about, let's just say if you have somebody who's listening to this podcast, like, hey, I want to purchase a house within the next 6 months or so. The first thing we established is that, hey, get all the players together, right? Mm-hmm. Not for the sake of getting approved, but for the sake of figuring out what it's going to take. So you have all your directives right there in front of you, because what you don't want is that it's time to buy a house 6 months from now. And you then find out that, hey, I need to have my down payment in a certain bank account for 6 months, or XYZ need to happen. My taxes need to be filed in a certain way, amongst other things and so forth. So yes, getting the team together. So having said that, Adam, we have people nationwide that are listening. And I know that you're limited to California and Los Angeles, but what are the things that people need to look for in a realtor? How do they make sure they're with the right real estate company that's going to take care of them, or right real estate agent? Because, my judgment is perception is that loan officers, even credit repair guys, and even real estate, right? People have very low satisfaction rates with.
So one thing I tell people all the time, and I agree with you, my industry has a used car salesman sheen all over it. And it's
same here, bro. Same thing in my industry as well, too.
And it's sadly earned, but there's a lot of that out there.
Yeah.
One of the first big red flags I would say with a realtor is if somebody comes in and says, I did 150 transactions last year. That's not your guy. That's a guy you're going to be able to talk to maybe 5-10 minutes a week, because he's got a team of junior people working under him that aren't just assisting him. They're really, he's turning them over so that he can reach those big numbers. I do about 20 to 30 transactions a year. I did 1 year where I did over 30, and it was an 80-hour-a-week job. Yeah. If you're doing it right, especially with something like FHA. Because FHA, like we're saying, you should be talking to somebody like me, somebody like Ali, and a loan officer at least 6 months in advance. So that's a 6-month commitment minimum of working with you. And that is if we find the right home and get the offer accepted. So there are people that have used hyper-capitalism with real estate. And what I mean by that is, how do I make the most money with the least amount of effort? And that's never a benefit to the client or the customer. That only benefits the realtor and the people getting paid. I limit myself to what I can do. The second thing I would say is, when somebody says, my company handles FHA properties all the time, I would say, how many do you do? Because that's the realtor you'll be using. Now, sure, the person can go to their broker and have support, and that's wonderful. But I want them to tell, if I was working with a realtor out of state, I want to know, how many FHA loans did you do last year? How many did you do the year before that? So it's not just one or two. I know they have more experience with it, because if I've learned anything about real estate, there are no identical transactions. There's a different thing every time, and every time's a learning experience. And the last thing I would say, and this is really just about you, go with your gut. If you feel a connection and you feel good about how somebody's explaining things to you and working with you, and however that you want that relationship to go, that's good, because you're going to go, like I said earlier, on an emotional ride with this person, and you want it to be somebody who knows what they're doing, but also is going to be able to hold you through that experience. One of the biggest jobs I have, and Ali, correct me if I'm wrong, I judge your industry is the same, is I protect you from seeing how the sausage is made. There's about 90 things that happen on a daily basis in escrow that would be very upsetting to you that you don't need to know about, because they don't regard you. It's just little fires we put out that we deal with all the time, because we're not highly emotionally involved. We're able to stand back and go, well, here's how we correct this problem. Here's how we make this right. That's some ways that I would vet a real estate agent. And, the other thing you can do is, even if you're working out of state, I've done this for people before. I had a friend of mine buy a place in New York 2 years ago. I actually went with him and I interviewed the real estate agents for him and found him the one that I knew would be good for him, because I know what real estate agents, I know what they say and what kind of questions to ask. So even if you have a realtor in the family, but you're buying, it's a California realtor, but you're buying in Arizona, talk to that realtor and trust, because he's going to be able to better vet another realtor. He understands what to look for better, or she, or they.
Gotcha. Yeah. And what I'm hearing, just to rehash here, is that number one, I read the stat that 80% of licensed realtors in California only sell one home a year or something like that. There are a lot of people that are just realtors for show and have no experience or barely get any customers. And you want to see, what number of transactions they're doing. And I don't think you could check that online, right, as to how many closes they've had or anything to that.
If the realtor signed up for Zillow, you can look them up on Zillow. It's not 100% accurate, but it's pretty good. Like it'll show you what they've done. And I believe on the MLS it can be looked up, but it would probably have to be looked up by another real estate agent. I think that's the real estate level of the MLS, because you have to get a portal to the MLS through a realtor. You can't just go onto the MLS.
Gotcha.
And that stands for multiple listing service. That's where Zillow, Redfin, everybody pulls their data from the MLS. That's the mother.
Oh yeah, one thing is experience. Look them up online or on Zillow to see how many transactions they've had, and then just to kind of give folks an idea as to what you'll get approved for. The general rule of thumb, give or take, is whatever your yearly income is, and this is, correct me if you disagree, Adam, but whatever your yearly income is that is gross before taxes, you'll get approved for up to 5 times that loan amount.
That's about right. Yeah.
If you make $100,000, you are getting approved for $500K. Now, guess what? You want $1 million house, you probably need to get somebody to get on the application with you that's going to that's going to basically increase the income so you could get approved for more money, a higher loan amount, quote unquote. Another way to get approved for $1 million house, if you're making $100,000, is you get approved for a $500,000 loan and you put $500,000 down. So, which obviously not everybody has. So I think that's kind of like, if you're just trying to figure out hey, can I even get approved and what I get approved for? I think that would be a good basis to go start looking. So if you make $150K, times that by 5, what is that? $750,000 roughly, give or take. Mm-hmm. And for FHA, you'll need 3% down of that purchase price. So $750,000, 3% down is 22 odd K or so forth. So now all of a sudden, what you'll get approved for, and then you could go to sites like Zillow and so forth, and and kind of get a guesstimate of what type of properties you could get. Because in California, $750,000 does not get you a whole lot in most neighborhoods nowadays, right? Especially if you're in West LA and Los Angeles and so forth.
Yeah, and Ali, I'll also add to that. If you only get approved for $500,000, call me. There was, right after the recession, there was a time in LA where if you didn't have all cash, you could not buy a home. And I had a lot of young couples that were looking at buying a home, but they either had just gotten married or had just had a baby, but they didn't need a home right now. Because those of you who've had children, you don't really need a home until the kid's starting to move around, like 3-4 years old, where they start to want and need their own space sometimes, right? So there's some time there. And what I did back then, I actually started a business in Big Bear, getting vacation rentals. I help people buy property to create income through Airbnb and VRBO, not only in Big Bear, but Joshua Tree. And sometimes the home isn't the first purchase. Sometimes it's an investment property. And then 3-4 years later, step 2 is home, especially when you're dealing with a high value market like Los Angeles. If you're looking in Alabama, Mississippi, Tennessee, you're going to be fine. $400,000, $500,000 is going to get you a lot of bang for your buck. But in LA, sometimes it might be a 2-step process. And the nice thing about that is, if you have an income property, guess what that does? Now you're not, if you made $100,000 before and your income property is giving you $25,000, $30,000 a year, now you're making $125,000 or $135,000 or $130,000. So you can qualify for a larger loan. So, it makes it better not only by giving you an asset that's giving you income, it makes you a better candidate for a loan. That's one of the reasons I like ideas like that when you can't get right into the home.
Gotcha. So far, just to rehash, this is a lot of information being thrown at people. We've gone over what the requirements are to get approved for a home loan. We've gotten over how to pick the right agent. We want to also let's just say somebody's sitting on the fence. Should I buy a house or should I not buy a house? What are the things they should consider for that? I know that they'll be looking at how much more am I going to be paying for the home? as compared to the rent and so forth. And I know there are some tax benefits to buying a house too, because listen, I live in Santa Monica. I pay, $3,000 rent. If I want to buy a property here in Santa Monica, even a 1-bedroom is going to run me for mortgage $6,000 or $7,000. It's not like that for me doesn't make sense. I'm better off purchasing something inland and renting that out, like you said. But yeah, so for people just saying they have a hunch that they should buy a house, they're not quite sure, like, how does one come to that conclusion that this is the right thing for me to do? And what are the things that one needs to look at?
So that's a great question. There's kind of this quiet underlying pressure of, by this age, you should be married. By this age, you should have a kid. By this age, you should have a home. It's there. I experienced it and I know it's still there, but it's when you can become conscious of it, it should be ignored.
Bro, I bought my first house at 28 and I lost my ass thanks to the Great Recession. I got my ass handed to me.
I lost my home in the Great Recession. And it was a horrible situation. I had a lawyer and everything, and the lawyer did not do well for me. And I lost my home because I bought it right before the recession happened. And so that's exactly would be my answer is if you are looking at this and you look at what your mortgage payment's going to be, everybody thinks about the purchase price of the home. That's not what's going to affect your quality of life. It's your monthly cost. That's your mortgage, your taxes, your insurance, maintenance, that's what's going to affect your life because that's the thing you have to come up with every month. And if it's, 80% of your income, that's problematic because if something happens, if there's a recession, if you get in a car accident and you're in the hospital for 2 months, there's all these things that could happen. You want to have a little wiggle room there because you don't want to get put in a situation where the house might be on the line, right? And that, again, that's something that a lender and a credit repair person can help you with because credit repair isn't only going to help you with the loan. It's going to help you if something bad happens and you need a loan to get through that point. So that's a very important thing. The people who really got in the most trouble were stretched so thin because of these terrible loan packages. They're like, oh yeah, we'll just give you a loan. And it was really bad what was happening in the lending industry. Obviously that's not happening anymore. There's been tons of bills about it. It can't happen at this point, but it's really important that you can get through some problem times because I just turned 50 a couple weeks ago. What's the old joke? If you want to make God laugh, tell him your plans. That's the truth. I mean, like you make plans and then life throws curveballs. It's going to happen. You want to be prepared for that. It's one of the many reasons I like, if you don't feel like you're ready yet, get an income property because the income property gives you all kinds of options. You can keep it for income. You can sell it to take your money back out. It can have tax write-offs depending on situations. Like if it's right there and you only do it a certain amount of year and you live it the rest of the year, you can still get some tax benefits. And the funny thing is, I have ladies that I work with who are Airbnb experts. That's all they do. So even I know I can't know everything about real estate, and I make sure to have myself surrounded by people who know better than I do in the areas that I don't specialize in.
So let me ask you something. Somebody is paying $3,000 in rent. Mm-hmm. They decide to get a $500,000 home, and that payment's going to be, hypothetically speaking, $3,500, roughly, give or take, right? Now, what would be the tax savings or interest, what would be the write-off for them so they could level this out?
So the write-off is specifically about the interest you pay on your mortgage payment.
So basically on a $300,000 house, on a $500,000 house, you're paying $3,500. You spent about $40,000 at least, roughly, in interest.
Yeah, especially in the beginning. So over time, they call it principal and interest, right? In the beginning, 95% of what you're paying is interest. So it's almost your whole mortgage payment.
So almost the whole mortgage payment is going to be a write-off.
Yeah. So if I have a mortgage payment of $3,500 and I put down 3%, I'm probably getting to write off $3,300, $3,400 a month because that's interest. Now over second year it'll be 33. The next year it'll be 3250, and then just like interest works, this works in the other direction.
Yeah, the first 15 years you're pretty much mostly paying interest.
Right, and here's the benefit of that. Usually, the hardest time of ownership is in the beginning. Yeah, if you can own a home in Southern California for 10 years, you're probably going to be fine. I've never heard anybody say, gee, I really regret buying that property 15 years ago in Los Angeles. They've said it about 3 years or 5 years, but if you can wait it out, if you can give it enough time, even in something like the Great Recession, parts of LA like Burbank and Santa Monica, they were back in 7 years and ahead of themselves in 8. So it's just, and that's the worst recession theoretically of our lifetimes. So, as long as you have a plan to get through all of that, that's a really good situation. It's another reason why I talk about properties with what we call accessory dwelling units. So for example, I have a listing right now 2 miles from SoFi Stadium. It's a 3-bedroom, 2-bath house with a detached 1-bedroom, 1-bath. So when there's a Super Bowl, when Beyonce plays, when Taylor Swift plays, they can make $1,000 in a weekend renting out that back unit. It becomes income on the property. And here's the trick. In the loan process, when you're getting approved for that home, they will consider the monthly loan value of that unit as future income, and therefore allow you to lend more money, to get more money.
Speaking of which, right, what you're talking of is the ADA's attached dwelling. It's
called an accessory dwelling unit. It's essentially when somebody converts a garage into a 1-bedroom or a studio, or the state of California in 2017 passed a law that said as long as you are within X miles of public transportation or can provide parking, you are allowed to create an ADU, and that's a statewide law.
Let me ask you something. What are you, I've been hearing a lot about those container homes, right?
Yeah.
Which are cheap to build and whatnot. Like, would they qualify as ADUs? And what's the cost of, somebody buys a $500,000 house and they look at the backyard, they're like, hey, I could put like a 1-bedroom unit here. How easy is it to put one together and get licensing for it and approval?
So it's unfortunately laws, especially in real estate, they move behind like they should be working very hard for shipping container homes. They're a great idea for so many different reasons. They're less expensive. They're better for the environment. They last longer, but it's easier today to permit an existing garage as a conversion than it is to bring that in. Now, I'm not saying don't do it. If you have a large enough backyard, it's a great idea.
Yeah.
But the problem is usually in LA, especially if you're central, you're not looking at a very big yard. There's not a lot of properties in LA that have a lot of yards. So you want to go with what's existing there. Also,
have you been seeing people put these container homes in their backyard? Have you seen any?
I've seen a number of them in Joshua Tree. So I did a lot of properties.
I've seen a crap load there where they buy a vacant lot.
And they put in a bunch.
Yeah. And I think those suckers, like on Airbnb, they go for like 100, 150 a night.
On a regular night. If it's peak season, it can be even more. And those laws have changed. Even Joshua Tree has gotten to the point where they're like, okay, you can't put 20 of them on an acre. Like but still you can get a home. I just sold a home for in Joshua Tree for about $380,000. It's a 3-bedroom, 2-bath house on 2.5 acres. They can add 4 additional units to that if they want to. So that's a fantastic investment opportunity. And if you're able to live in the main house, there's all kinds of benefits to renting out the other properties. But I don't want to get too much into the vacation rental stuff. It's just the ADU is a very valuable thing, especially for a first-time home buyer, because it creates more income before you even offer. So, and then when you're in, you've got a mechanism that's helping you pay your mortgage. So all of a sudden, you don't go from $3,000 in rent to $3,500. You go to $3,000 in rent, or maybe $4,000 in rent, to $3,000 in mortgage, because you've got this mechanism that's helping you with that.
Yeah. And also, if that's not an option, you get a bigger place and rent out the rooms. I've got a friend of mine who who basically rents out 3 of his rooms, and he's got, I think, a $1.5 million or $2 million property.
Yeah.
And
I tell people all the time, have a plan A, B, C, and D. And D can be the one you really don't want. Like maybe you really don't want to rent out rooms in your house. And I completely understand that. But if there's an economic crash and that's how you get through it, you're going to be so older you is going to be writing younger you thank you notes, because like I said, property, you give me any property in LA right now, 15 years from now, I'm going to be really happy I have it. As long as I can get to that point.
Mhm.
There's always high demand for places like LA, San Francisco, New York. These areas have high demand all the time.
That's true, man. Like these properties do appreciate, although the solid investments and there's fat chance that they're going to be depreciating over a long course of time. So far we've gotten over what are the loan parameters to get approved, which is 580 score could get your foot in the door, 640, will get you a decent rate as such. Talk about like, is now a really good time to buy? Because people may be talking about like, hey, there's a lot of, there's very little inventory out there. And look, rates are so high, right? What do you think if you're a first time home buyer, what are you doing at that point? Are you sitting on the fence and saying, hey, I'm going to wait for rates to go down?
Especially if you're buying a home you're going to live in. If it's not an investment property, waiting on the fence 95% of the time is a bad idea. I can't tell you how many people I was working with, 6 years ago going, oh, these rates are amazing, but the prices are so high. And then the rates went up and the prices dropped, but their mortgage payment is still the same or higher because the rate affected it. So it's still the same quality of life. That's why I talk about the monthly cost. I would have rather overpaid 7-8 years ago and gotten that, like a 2.75 rate, because that's free money practically. That's amazing. And we're likely to never see that again in our lifetime. So right now, it's not the crazy seller's market it was, even in LA. It's still a bit of a seller's market, but the buyer has a lot more leverage. The buyer can get a lot more concessions. Right now, the listing I have, we're working with somebody who is simultaneously selling their condo and then moving into this. So they want the two escrows to coordinate. That was unheard of 7 years ago. No seller would even try to do that because they don't have any control over that other escrow. Nowadays, it's definitely something we can talk about. And we're probably going to take this off. It's a good time to look. And another thing you said about the credit, I want to go back to. If you've got a 560 credit score or even a 580, and you start talking to credit repair, realtor, and loan officer today, 6 months from now, you're going to be well in the 600s. You might even be in 700s because they're going to teach you how to make that better. So if all three are working at the same time to get you in a house 6 months down the road, you're going to end up with a better rate. You're going to end up more knowledgeable about what you're looking for and how to do this. And you're going to end up with a better loan. So, don't hesitate. Reach out to people now.
There we go. Hesitation leads to procrastination.
Yes.
So yeah, thank you for that, man. And I think one of the things also that I talk about is that this could be a very daunting process. Where do I start? What do I do? You don't have to figure out everything. Get the team together, find your realtor, find your credit repair company, find your loan officer, and they all should be talking to one another as such. And Adam's spoken about, how to go pick the right realtor as such, right? When you're dealing with a credit repair company, make sure they only charge you after the job is done. Unfortunately,
right.
With real estate, there are a lot of companies that promise the earth, stars, and the moon as such. You only want to deal with a credit repair company that charges you nothing up front and only charges you after your credit's been repaired and you see results as such. And if you lead with that and picking it with the right credit repair company, guess what? 90% of companies are going to fall off if you lead with that. So it's really, and I think the moral of what we're saying is take action right now, get your team together. And the sooner that you act, the more likely you are to actually take care of all the stumbling blocks that are there in their way. Because a lot of people, myself included, I'm like, hey, I may or not want to go try certain things because I'll get denied. Well, this is not for that. It's about figuring out what is it going to take for you to get approved, even though if you're not ready right now. In 6 months' time, what are the things that need to be in place so you could be in the best position to get approved as such?
When I work with a home buyer, the first thing I tell them is talk to a lender today, because they're not going to tell you you're not approved. They're going to tell you, I can't approve you now, but here's what we can do to get you there. They want to coach you to become their client. That's Exactly. That's going to benefit them too. So they're going to tell you all the tricks they know in the industry. Ali is going to tell you all the tricks he knows in order to clean that up to get you to where you want to go. Because frankly, in all three of our industries, in a real estate transaction, I'm the last guy to get paid. Everybody has their money and then I get mine. And that's the way it should be. Again, even if you end up 8 out of 10 people I talk to in real estate, I don't end up doing a transaction with them. And I don't really think of it that way. I think of, I do my job right. I serve the people who reach out to me the best I can, and the money will come. And it's okay. You know, if somebody just calls me and wants advice and they never call me again, I'm happy to take that phone call, because we talked earlier about how there's kind of a used car salesman sheen over our industries. Well, that means it's on us to earn your trust and to earn your business. And we're more than happy to do that. Give us a call. We'll show you what we can do.
So Adam, where do people reach out to you if they're in the market for a home, or they're just starting and want to ask some more questions?
I'm so glad you asked, because I'm so proud of this. My website is realestatejedi.com. That's where I'm at. I work with a company named John Hart Real Estate. That's my broker. So it's a portal to that large website. The benefit of that is we have an on-hand lawyer. So if you need to talk to a real estate lawyer, which happens more often than you'd think in transactions, we have somebody on staff that's going to give you that advice and is part of what we offer. So you're not having to pay an outside lawyer, which can be very expensive. And other services as well. But yeah, realestatejedi.com. When I looked that up a few years, it was like, like, how has nobody bought realestatejedi.com? Oh my goodness.
Yeah, thank you for that, Adam. And, you know, again, if you're in the market trying to get situated to get approved for a home loan, get your team together. If you have issues with credit, reach out to my company, imaxcredit.com, or you could email me directly at info@imaxcredit.com. And our goal here is, you know, sometimes there may be some self-help options that you could be advised of that you not even need credit repair. Or sometimes accounts may be scheduled to fall off sometime soon themselves. Or other times, you know, you may need credit repair, and that's where we could come in. And sometimes we're not the right solution. Sometimes you may need credit counseling or other things, in which case we could give you referrals for that as well too. So having said that, hope this podcast was helpful. And I'd say, you know, right now, if you're in the market for a house, take action right now. Take care. God bless. Goodbye.
Goodbye, guys.